and we'll be tracking that. But let's also get into the real estate space, discuss what the outlook is when it comes to the sector as a whole. What's the view when it comes to pricing, commercial versus residential, and of course, demand trends. Joining in on the show, we have Gulam Zia, Executive Director at Knight Frank India, as well as Anuj Puri, Chairman at the ANAROCK Group. Thank you so much, gentlemen, for taking time out and joining in. Anuj, let's just get in a sense as to what you're seeing when it comes to the trend for housing prices in the Indian cities. Clearly, it seems that it's been on a rise, but at a time when we're looking at inflation moderating, how are you looking at the correlation between these two factors, and what's the outlook when it comes to residential in particular?
A very good morning, first of all, to you and all your viewers. The residential market continues to surprise us. It's at a 15-year high, and it does continue to remain very strong. The good thing is that we're not seeing abnormal price rise within the residential real estate market. And I think after a very, very long time, I've discovered is that the developers have been extremely mindful of bringing in more cash flows and deleveraging their position rather than continuously increasing the prices and somewhere hurt the sort of sales of their residential. So clearly, we're seeing between 6 to 10% price rise, but that is perhaps in line with the inflation, but not anything given that the demand has been at a 15-year high, that there is any abnormal increase in the price rise across the residential sector. Clearly, within the residential, we're seeing luxury doing exceptionally well. Affordable, unfortunately, not doing as well, and there isn't that much supply that is coming in. But cities like MMR, Mumbai, Bangalore, NCR, really leading the pack. Having said that, there are a number of tier 2 cities which are surprising us. Lucknow, Bhubaneswar, Goa. It is surprising that many of the listed developers are getting into these cities and doing phenomenal projects.
Let's get in your take as well then. Gulam, is that a trend that you're observing as well when it comes to the pricing? There's nothing extraordinary. It's 6 to 10% in line with inflation. And is it that, there's that definite dichotomy maybe between how luxury is panning out versus the affordable segment?
Well, I would love to agree with Anuj word by word. What he said is exactly what the market is right now behaving like. So to start with, the point that you wanted me to also clarify was on price rise. Bang on. About 5 to 7% price rise per annum is something which we have been observing for last couple of years, at least last 2 to 3 years, and which is in sync with market requirements, market realities. The buyers are okay to pay that kind of price rise, and till such times that price rise doesn't go haywire, say closer to double digits, etc., we are in safe zone. So this price rise is not worrisome for the moment, and that's reflecting in the transaction numbers as well. We have been watching. Of course, there are a few words of caution emerging from a few quarters, stating that the current quarter ending in a few days from now is not as good as what we would want to believe, but I would still say that it is a bit too soon to just look at one quarter performance and give a conclusion, because I would look at least 5-6 rolling average quarters, and there's nothing to worry about. In fact, the previous quarter, if I look at, had been performing far better than YOY growth, etc., were at least about 12 to 15%. Mumbai outstripping almost 17% growth YOY last quarter, and current year most likely continuing, because last 3 months, Mumbai at least has been breaching at least a decadal record, if not more. So overall, transaction volumes also haven't been affected yet. And ultimately, coming to the difference between the sales in super luxury vis-a-vis affordable, again, what Anuj's assessment is perfectly bang on. This is exactly what it is. The big problem is that not many developers are keen to get into the lower end of the market to cater to that segment because of lesser margins over there. So most of the focus is on the upper end. When you have quick sales are happening, margins are far better. And that is something which is reflecting in lower volumes of inventories in the lower end. And that's directly reflecting into the transactions in the affordable housing. So net, this is where we are. Affordable housing is still suffering, whereas the upper end continues to show bumper sales.
Absolutely, it does. And Anuj, do you think a lot of the function of the pricing remaining as is, or just a marginal uptick, at least in the Mumbai and the MMR region, is also because it's already priced to perfection? And do you think it's that, or is it also because a lot of new supply is coming into the market?
Combination of two or three factors. One is exactly what you said, is that maybe it is priced to where the market is. Second, I genuinely feel is that when you speak with the developers, they're just wanting to make sure that the sale momentum is not being disrupted by any price rise. They're very, very clear is that I want the financial closure of the project through the sales, not through debt. And hence, I will sell as quickly as possible, not necessarily increasing the price, at least to cover my cost of construction, which was not the case in the earlier rallies. That's the second one. And the third is, I think the market has become a lot more mature, consolidated, well governed, and there is a financial discipline. And in this consolidation, a lot of the fragmented players who used to do this abnormal increase in the price have gone away. These are largely now institutional players. They understand this game. They understand the volume game. Many of them are really the listed guys, and hence, they're largely playing the volume game. As a result of it, price attraction doesn't seem as exciting. Where they do increase the prices, that once the sales is sufficient to cover the construction cost for a project, then they know they're already home. Then they start to increase the price because they know now they're playing in a safe zone.
Right. Okay. Gulam, the other thing I wanted to talk to you about as well is the fact that when it comes to commercial markets, what are the trends that you're spotting? Because there seems to be the biggest disconnect perhaps in what's happening in the commercial real estate market as opposed to residential.
Well, I would beg to disagree. Commercial real estate also is doing phenomenally well. If I have to give a few numbers, the last quarter, and we saw almost about 14 to 15 million square feet of gross absorption of office space in the country, the top 7-8 markets that we always talk about. And current quarter, the way the things are stacking up is going to be outstripping that number, doing better than at least 15, 16 million. So if I look at the first half yearly, we are poised to break all records historically. We could cross at least 60, 65 million very comfortably, which would be better than what we did pre-COVID numbers. So I would want to put it on record that while there are, global trends are way different than what is happening in India, at least in India, commercial market is here to perform, and it is visible all over, both in terms of new supplies coming in. A lot of the respected developers are bringing in huge number of supplies as well, which will be not overstepping the demand. It's going neck to neck. But in terms of absorption, office markets, and of course, Bangalore has been outperforming like all the years. Hyderabad is a great performer. Pune, Delhi, Chennai, pretty much all of them are reaching their double-digit million square feet per year kind of number, which is once again giving me confidence that the current year, the way things are stacking up right now, will be historically best as far as commercial real estate is concerned.
Okay, that's good to know. Anuj, what is it when it comes to the overall rental prices? Are we seeing some sort of an overheating over here? Is there a correction? And more importantly, what is the trend that you're observing in the long term in some of the key micro markets? There seems to be that huge surge in supply when it comes to residential units. So what's the trend? Is there, and even just that, consumer buyer preference, does that continue to veer towards buying versus renting? Are you seeing a shift in trend?
If I can cover a little bit more where Gulam left, because it is a very interesting point what he makes. It is after a very long time that we're seeing a rally where both the asset classes, the commercial and the residential, doing well. As Gulam said, is commercial market, we may see the best ever year that India has seen, and as I said, residential, we're seeing a 15-year high. So it is interesting where we are in the real estate space, given that both these very large segments of the real estate market, which usually are counter-cyclical on many of the peaks that we have seen, residential behaves slightly different to commercial. Commercial globally behaving very differently, very negative sentiment globally, 1 billion square feet empty space in the US. And hence overall people think is that, oh, it's bad to sort of buy offices, and office is a bad word. But clearly in India, we're saying is that this will be the best ever year, as Gulam put it, for the commercial. On the residential, two questions that you've asked is how the rentals continue to remain sort of lackluster in terms of the yields. It is between 2 to 3% yield on the residential. This is what it was pre-COVID. This is where we are during COVID. So whilst the rentals have gone up, the property prices have gone up in the same proportion. So the yields continue to remain sort of 2 to 3%. In terms of buying versus rentals, clearly the millennials are starting to prefer to buy. And that is where we're seeing the growth in the demand, which previously they were renting. I think in COVID, something has happened. Either their parents or their girlfriend, boyfriend, or just the way that many of the landlords behaved with these tenants. They have now decided that we're going to own a space. So roti, kapda, or makan, that makan has come back into priority.
Okay, good to know with respect to the fact that it's come back to priority, Gulam, as well as Anuj. Always a pleasure interacting with you. Thanks so much for giving us a clearer picture as to what the trends are like when it comes to real estate.
If you like this video, then like, share and subscribe to ET Now.